Hey guys, Mike here. So another jam-packed video for you, getting you set up for the week and everything. And we'll go into the indexes, what to expect, some stocks to look out for. But I ran across some information. I'm one of those people. I am always curious, like what are the rich folks doing with their money right now? Where are they at? Are they piling into the market? Are they piling into bonds? Like what are they doing here? And I'm going to show you that, as well as something that I think we talked about a year and a half ago, maybe. But I got some more updated information when it comes to our real estate market, and I'll touch on China's as well. But in this case, it was something I said, it's unfair what's happening. I think the government needs to step in. Well, the government don't have to step in anymore, because you'll see what I'm talking about when I show you the chart. Kind of fixed itself, is what happened and stuff. And then if you don't think we're traveling, I'm going to show you a chart that pretty much shows, oh yeah, a lot of discretionary spending going on in this country, all right? And, if you look right here, this is the wealthy folks, right? So high net worth individuals. What are they doing? Going into cash, right? This is the highest levels. This goes all the way back to 2002. Highest level we've seen so far. They're moving into cash, whether that's treasuries and things like that. This is what they're doing. And you can see, as far as stocks concerned, they got like 23% of their portfolio in stocks, 13% in alternatives. And so again, you got to remember, these folks have millions of dollars, right? And so when you just say you have like $50 million collected between 5 to 6%, and it's almost completely risk-free, that's a lot of money, right? I mean, you already have enough. So it's a little different the way we think of things. And if you want to be in the top 1%, might not be as much as you think it's going to be in the U.S. Actually, according to this, I found this like last week, all you need is about 5 mil. Now if you're in Monaco, I've never been there before, but you need like 15 to 20, right? But in the U.S., and you can see as it goes down, if you move to other countries, you only need like a mil, right, to be in the top 1%. So if you're aiming for that, or your net worth is there already, congratulations. Now, what I was talking about a year and a half ago was these investor purchases of homes, right? It was driving normal folks out, because they were literally coming in and buying up whole neighborhoods and making them into rental properties and stuff until the valuations went up, and then they would sell them off piece by piece. But you can see, man, investors, as far as buying homes, is down 49% year over year. I mean, and of course, why is that? Very simple. I've showed you what a mortgage costs now, right? It makes no sense. It's actually cheaper in my area, and probably in yours. And I asked you to check on this. Put it in the comments if you did. It's cheaper now to rent than it is to actually buy a home, right? I mean, I have neighbors who might be moving out at some point in time. I would love to buy the house and rent it out, but I'm like, no, the numbers don't make any sense. Like, you got to be able to make money, right? And then how much farther up can it go as far as appreciation over the next few years versus actually down, right? There's more risk to the downside in Florida, not really, in a lot of areas in Florida versus other states, because a lot of people are moving to Florida right now and stuff for a number of different reasons. But it's just one of those things. So the problem fixed itself for now, right? I mean, when the market turns back down and everything, again, investors will start piling back in, because yes, having a rental property as an individual is a very good thing for taxes and bringing in other passive income. So just FYI on that. I look forward to those days again, by the way. Now, are we traveling? Yeah, I definitely would say we're traveling. I mean, we know we're traveling. I mean, this is the TSA checkpoint when it comes to number of total travelers throughout. And you can see, I mean, that was 2019 levels before we shut down the world. We've eclipsed that by a country mile. And whatever happened in 2023, all of a sudden you got this big push up, man. And guys, before we continue, if you're getting anything out of this, please hit that thumbs up down there. I really appreciate it. And if you like the material here and the videos, think about subscribing. And I mean, I got neighbors, two couples we know. I mean, they're going on an Alaskan cruise and they're flying to another place. I mean, all over the place. And we got some trips planned. So let me know in the comments if that's what you're doing. But yeah, plenty of discretionary spending still taking place. Plenty of travel still taking place. And that's with a shortage of pilots and everything else, right? That this is happening. So not stopping us at all. Now, getting into what we might be looking at in the index stuff. And there's going to be things that are going to be affecting the market, right? Are we going to see a rotation? If you see more of a rotation, maybe some profit taking in tech and everything, going into IWM, maybe the Dow, whatever, that could affect it as well. The other thing to look at is, yes, and I'm going to talk a little bit more in this in probably tomorrow's video or something, but a lot of fear-mongering videos about the Treasury refilling their general account. And, oh my God, it's going to tank the market and all this good stuff. They're going to sell $1 trillion in bonds and T-bills, whatever. And I'll talk about that more than ever. But remember, keep this in context. Fear-mongering videos get the most clicks, okay? Two, fear-mongering newsletters are very profitable. So I don't blame them for doing it on a business perspective because, people buy into it. That's just the way it is. As a society, our beliefs has changed. The way we think has changed, and we like fear-mongering. So that's kind of the way it is for whatever reason. I don't know why I don't, but for whatever reason. But I'll give you a hint of why it's not going to be as bad as what people think, or most likely won't be as bad. I mean, there's no way to predict it. But it's one of those things you got to remember who's going to be buying. Right, that's what you got to keep in mind. Who's going to be buying? Right, it's not going to be a bunch of retail investors rolling in there, beating the big boys to the punchline. Okay, and so just keep that in mind. So, but I'll get more in that, and I'll show you some charts and stuff on that. But looking at the S&P here, obviously you got a breakout on Friday, moved up out of this ascending wedge right here and stuff. And usually this is bearish, but it shows these get negated all the time, right? So I ended up moving up, obviously. When you look at it, I mean, the RSI extremely overbought, right? MACD looks horrible, but so maybe we get a short-term pullback with that gap down right down below, as you can see right here, even a bigger one down there around the 408 level. But the next level up, if it can get there, it's just right there around 430, 431, right in that area, and that is not a big move at all to get there. Again, we'll have to see if rotation keeps taking place or not, or more money starts flowing in, or more profit taking starts to take. Because you look on the daily, still has room to run, just FYI, which would put us right there around 434, 435 if that actually plays out. You look at the Qs, I mean, just a straight up cliff right there, as you can see. But it's aiming around the 368 mark, it looks like. And so keep that in mind. Again, it left a gap down below that as well. And so, you look at that volume profile, you can see on the right why it can move up and why it's been moving up so fast, and why a short-term pullback wouldn't be bad at all. You can see the RSI definitely overbought. MACD is getting overstretched, and everything will be the perfect thing for the market to do is come down, fill that gap, and then bounce off that support right there where the POC is. But we'll have to see on that one. You can see RSI on the hourly right there showing lower highs, while what do you see up top? Higher highs, right? So you can see us move back down that volume gap right there, then getting a bounce, maybe off the volume shelf. Will be good to fill that gap, but we'll have to see. Again, watch for more rotation to happen, more profit taking in tech for a reason. And the reason why is because what's going on? You got all of a sudden the valuations are getting crazy, okay? If you look at the Qs versus the S&P, you can see the forward PE has moved up quite a bit, and now we're at levels we hadn't seen since March of 2022, and it's moving up fast. Versus when you look at the S&P, it's basically gone sideways all of 2023. Really, it went up a little bit, not much though, and so it's just a big difference. Because why? Energy stocks sold off, bank stocks sold off, but AI has just been red hot. NVIDIA obviously adding like 300 billion in market cap in like a week or something, and then Meta and Netflix continue to move up, and then Microsoft and Apple sitting there right at near all-time highs and stuff. And you can see what else happened on the Qs to cause this. The 7, as we call them, what now? The Magnificent 7 now make up 55% of the index. That has to be a record. I'm pretty sure it's a record. I'm pretty sure starting in 2022, I talked about it being like maybe 35, 40% max. Now we're at 55%, and the other 93 stocks account for 45%. That's just on the NASDAQ 100, right? And so, which is amazing. Now you got the Dow right here. Obviously, big day on Friday as well. It's like the IWM. Positive bullish MACD cross right there on the bottom. RSI over 50 on the daily, which is good. Looking for it to break outside that wedge right there and head to all-time new highs. This is another one that's close to that, if I'm not mistaken. But what could affect it, the other thing is the dollar. Remember I told you if we even get to 105, we'll be lucky. Well, of course, what happened? About maybe 3 days after I said that, it started to sell down, right? And I've had that little arc in there for a while, but I think it's fixing to break that for sure. And you can see it's fixing to get a bearish MACD cross going on right there. And so looking for it to move down between like 101, 102, somewhere in there, which that can add fuel to the fire. And of course, when it comes to Qs, I've showed you, it ain't matter what the dollar does. The Qs don't care. Other parts of the market do care though. And so see if we get a sell-off on that and it gets saved around 101, 102, because that can definitely affect the markets. And of course, one of those Magnificent 7 is NVIDIA, and you can see, boy, this one right here just doesn't want to drop down into that big, huge gap it left, right? It keeps staying right above there, and between like 377 and 400 as people have been taking profit and stuff. But you can see on the daily right here on the RSI, still overbought. The MACD looks like it really wants to roll over right there. But again, it's still above that 5-day moving average. And the levels I'm looking for it to pull back to, if it does at all, around 345, which was the previous all-time high. I think 317 will make sense to be the other one as well. But again, just trying to enter that gap will be something, or come down, at least touch the gap, which you'll probably get a bounce right off of if we do that. And then also that trend line, this respected going on the way up here. But again, this one is in a world of its own right now with this whole AI. I mean, it's the AI king, right? Is the way you got to look at it. But, go to the weekly. I mean, look at the weekly. Look how overbought this thing is. And then look at that MACD. I mean, if that's not overstretched, I don't really know what to say. Now here, here's what I'm talking about when I say it's in its own world, right? There it was a way overbought on the weekly, and it went on a 135% run, right? Staying overbought for just weeks on end. I told you it can do that kind of stuff. And when there's parabolic moves, which this one is in, right? I mean, I know people that are bears, huge, like perma bears, and they're buying the NVIDIA at $400, okay? And so, again, good luck to them. Maybe that's the case. I don't know why they're not waiting on a pullback. Maybe it won't pull back, but and because bubbles and these hype things have been going for a long time, just FYI, okay? And Bob, I talked about yesterday, but I did want to add the volume profile in here, and you can see if it breaks that trend line, the descending trend line right there, and breaks out, it can move fast. And then, of course, what happens? It's going to go above this, give us a new high, which is bullish, of course, and then hopefully pull back, set a new higher low as well. But, it is a Chinese stock. We've seen this multiple times. With Bob, I think it's more of a trade in that range. You can see from like 80 to 120 or somewhere in there is usually what people are looking at. But what I was talking about with their economy, and again, it's all about the real estate market in China. 70% of their wealth is tied up in it. And you can see by this chart right here, I mean, you see it's a weak buyer sentiment going on right now. New lendings at all-time lows. And any chart I show you in the real estate market, it looks like this, where it just looks like a meme stock, like fell off a cliff, right? And so, again, that's not good for them. This is why, of course, what's happening in the Chinese stocks right now, every time this happens, they always come out with, well, we're just going to stimulate more and keep trying to stimulate, right? And so, that's where they're at right now. But again, if the real estate market ain't doing nothing, China's not doing nothing. That's just the way it is. And that leads us into earnings. And, understand this is, you're not getting no big names coming on here. What you'll end up with is a whole lot of retail stuff, right? So as far as us actually going out to eat or buying something like a Campbell's soup or whatever it is, things that, especially when it comes to restaurants, we don't have to go to restaurants. We can cook at home, right? And so when you look at any of these, where it's Dave & Buster's, Campbell's soup's like a staple, right? If they're hurting, everybody seems to be hurting, right? They make a whole bunch of different things. But, then you look at Trip.com, I want to see how they're doing. Are we still traveling? Which I believe we are. I have no doubt about it. DocuSign is going to be one to look at. And of course, NEO is a popular one on Friday. And as far as economic data, there's really nothing that's going to move the market as far as I can see, right? You'll have, the S&P 5 Global Composite PMI final information coming out, factory orders, ISM services, employment, things like that will come out. But, the other jobs data shot the market up, so I don't think there's anything that's going to affect that too much. A lot of mortgage information on June 7th you can look at, but again, this is data that just doesn't affect the overall market in a way. A lot of oil, gasoline, natural gas. But then June 8th, obviously here comes more job data, right? Continuous jobless claims, initial jobless claims. They're expecting to go up. They keep expecting that. Doesn't seem to be hitting the numbers though, right? And then of course on Friday you got nothing. So there's no real economic data going on. And the other question is, are we going to run up into the FOMC meeting, which is not this week, going to be next week, right? And so they've done it before, or do we sell off before the meeting, right? Because now, what's the deal? Nobody, the rate hike expectations are in the dirt, right? So, hey, this is great. They're going to pause, right? So there really shouldn't be anything as far as economy-wise that should affect it too much. So that kind of also clears the way a little bit. But again, watch the rotation. See if there's any more profit taking going on, especially in these big tech. Let's see if NVIDIA gains its legs again, starts pushing back up, or finally starts to push down. And then let's look what IWM and the Dow actually does, and the S&P. See if the S&P keeps moving up, right? Because right now it's all about the Qs, the NASDAQ, which is what's been going up and stuff. And I'll bring you tomorrow. We'll talk more about this whole general account the Treasury has and stuff, and I'll bring in some other stuff as well. dealing with what might affect the market. And so, again, it's not a fear-mongering channel. And so I'm not going to sit here and go, oh my God, it's going down 30% because they're going to fill the treasury account. Like, it's ridiculous. It really is. And I mean, could it happen? Sure. I mean, in this market, I won't count it off, but I'm not going to sit here and try to scare everybody to death with it. And I'm a guy who tracks liquidity every day for the members. Like, I believe liquidity's top 3. I think it's like number 1 on my list until you get to these euphoric stages, and euphoria has taken over. So I'll say number 1 is euphoria right now into the AI pump and everything. I mean, what I mean by this, not NVIDIA in a good company. None. It's like when I see stocks that literally have AI in the name, and then you come to find out they don't do anything with artificial intelligence, and people are buying them up like, you know, they're candy and stuff, and then realizing, oh my God, and they pump and then they dump hard. Like, that's euphoria. That's where we're at. Anything with AI in it, people just buy. You know what I'm saying? And so that's a disturbing thing. And the other thing is Friday helped with this, but I'm gonna try to quote this stat I heard and make people understand like why it's so important. Breath, that is so important. Somebody did a study and they're looking at every single recovery, like where we bottomed, and they went 150 days out, right? Which, because we're at 150 days now. Actually, we're at 152. But when they quoted this the other day, it said that, you know, normally you're sitting at like 76% of stocks are above the 200-day moving average at the 150-day mark. The lowest they found was 56, except in this recovery. In this recovery, as of, I think it was Wednesday, we were like 38% of stocks were above the 200-day moving average. Friday was such a big day for all the indexes, especially IWM, Dow, and all that stuff. It pushed us from 38% to like 46%, but still lower than any other time in history this study could find, and not even close to the average, right? That's just to the low. The average is like 76% or something. So, you know, and if you go back yourself and you look at like just the dot-com bubble, the 08, the 2020 recoveries, you'll see what I'm talking about. I mean, it goes fast, right? And so we've gone from 11% on like the NASDAQ. That's the one that has the most above the 200-day moving average. But like the S&P went from 11%. It went up like 60% maybe, and then dropped down to like in the 30s, right? And so, you know, that's something to keep in mind because breath is important. And the new narrative is, don't worry, breath will catch up, and maybe it will. And that's why this rotation is so important to pay attention to when it comes to these stocks moving above their 200-day moving average and stuff. So just keep that in mind. Food for thought. Let me know what you think in the comments, guys. If you got anything out of it, as usual, thumbs up. Hit that subscribe button if you like these kind of videos. I put them out 6 days a week normally. So anyway, I'll end up seeing you guys tomorrow.